So good afternoon and good evening, everyone. My name is Jennifer Murtazashvili. I'm the director of the Center for Governance and Markets here at the University of Pittsburgh. It is a great pleasure and honor to have with us this afternoon one of the world's most eminent experts on Islamic finance and banking, and also on the economy of Afghanistan. And before I introduce our speaker, I just thought I would introduce the talk that we're having this afternoon and the reason why we're doing this. As all of you know, the past 6 to 8 weeks in Afghanistan have been some of the most challenging in the country's modern history. And behind this dynamic is, we've heard so much about the political dynamics happening, the new government that's been installed, the new Taliban government that's put into power. But behind all of this are 35 million Afghan citizens who have remained in the country. We've heard so much about the evacuations, about the perilous journeys that have faced so many, but we've heard so very little about what's going on inside the country and how with international withdrawal, the cessation of aid, the economic collapse has really affected people in their daily lives. So I thought this was an extraordinary opportunity to invite Dr. Haroun Rahimi, who is one of the world's most eminent scholars on the Afghan economy, to speak with us and talk to us today about these dynamics. I should also mention that his lecture today is meeting in conjunction with a course I'm teaching here at the University of Pittsburgh in the Graduate School of Public and International Affairs, a course called Central Eurasia, Geopolitics and Political Economy. It's one of the rare classes in the Western academia that really looks at the hearts of Asia, not just 5 former Soviet republics of Central Asia and Afghanistan, but we look holistically at the region spanning from Iran to Pakistan, Xinjiang, Afghanistan, and of course, Uzbekistan, Tajikistan, Kyrgyzstan, Turkmenistan, and Tajikistan. So we're looking at this region from a very broad perspective. So let me introduce Dr. Haroun Rahimi, who's going to be discussing Afghanistan's informal economy with us today. Haroun obtained his BA in law from Haroun University, his LLM in global business law from the University of Washington School of Law, and his PhD from the University of Washington. He's currently an assistant professor at the American University in Afghanistan. His research focuses on economic laws, institutional reform, and divergent conception of rule of law in Muslim majority and modern thoughts. Rahimi's research has appeared in reputable local and international journals, and he has collaborated as an independent consultant with a number of research firms and policy think tanks conducting policy research on institutional development and good governance in South Asia. Most recently, he was at the Oxford Center for Islamic Studies, and he has worked on the legal history of Afghanistan and the ways that legal transplantation is legitimized in Muslim-majority countries. Currently, he's a visiting scholar at the International Institute for the Unification of Private Law in Rome. So without further ado, I will introduce Dr. Rahimi, who has a very brief presentation. After his presentation, which will last about 15 or 20 minutes, we'll open the floor to questions. And if you have questions, do not hesitate to enter them in the chat box, and we'll make sure that we get to them. Thank you. Dr. Rahimi.
Thank you very much, Dr. Murtazashvili, for that kind introduction, and welcome everyone. Thank you so much for being here. A special welcome to Dr. Murtazashvili's students, and I look forward to the Q&A section, which is going to be the most interesting part of the presentation, the whole thing for me, because I get to hear your thoughts and engage with you. But before that, I thought I would start with a brief presentation on some of the works I've been doing. As Professor Murtazashvili said, I've been looking at the Afghan economy from not looking only at the formal institutions of Afghan economy, but also looking at the informal arrangement that exists in the country. Primarily, I've been looking at trade and credit institutions. And early on in my research, 2 puzzles kind of jumped at me. two kind of puzzles emerged from looking at how Afghanistan economy was operating. The first puzzle was that Afghan banks, until very recently, I mean, right now Afghanistan is going through a crisis, a liquidity crisis. So it may not appear so, but until the collapse of Afghan state, Afghan banks held excessive reserves, so they're very liquid. But Afghan merchants, Afghan businesses reported increasingly having problem accessing credits and loans. So that was a kind of a puzzle that suggested that there is something, not a resource problem here, but there's an institutional problem that is limiting the growth of Afghan economy, despite the fact that the savings and the resources are available in the formal banking sector, right? That's something that I felt like needed explaining. The other puzzle was that although Afghan banks were unable to issue loans, and the loan distribution, formal loan distribution remained very small, throughout the past 20 years. Afghan economy was running on credit, simply for the fact that people were very poor, and as you can imagine, for people who have financial issues and like living in poverty, they tend really to spend more than they have, or need goods and services more than they are able to pay for them at the moment. And if you are a vendor, in order to maximize your revenue and sell, you would have to find ways to pay for these cash-strapped population, and then enter into arrangements with them that would allow you to recoup what you've given them in terms of credit. So bank loans were, but Afghan economy was basically a credit-based economy. And these two puzzles are obviously connected, and that was kind of the motive for my actual research for my PhD. That's where I started. And through doing more than 100 interviews with all different actors involved in the Afghan economy, and looking at this trade and credit dynamic, how it was unfolding in the country right before the collapse. We're talking about the economy that existed before the collapse of Afghan state. A number of problems emerged with regard to credit transacting in Afghanistan. Like what are the problems that exist when people are engaging in intertemporal transactions. That what basically a credit transaction is. The exchange of values happen at 2 points in time, not instantaneously. And the three problems that I believe were central were volatility of business climate. Afghanistan was a very, and still continues to be, very unpredictable climate. That meant that many businesses had, especially businesses that work in retail, even medium-level distributors, and the way the money kind of was trickling up, the top importers in the country had very unpredictable cash flows. It was very hard to basically have predictable, reliable cash flow in the country, just because business climate was very volatile for different reasons. We can talk about them more. Obviously, conflict was a major driver of instability, but also Afghanistan is a landlocked country that has unreliable business routes through different countries that have often hostile relationships and with the country that could cause disruption in trade flow. So for a variety of reasons, Afghan business climate was very volatile, and that would pose the major problem to credit transactions that have to be obviously happening in 2 points in time, and it made it very difficult for businesses to manage their liquidity if they were to engage in credit. And if you're a bank, that's obviously an even more serious problem, because banks rely on kind of inflexible preset schedules of payments, which many businesses would have a hard time adhering to in a context of a volatile business climate like Afghanistan. The other major problem in engaging in credit transaction in Afghanistan was just the formal property system was almost non-existent. So the idea of having a formal grid that you could map people's assets into and use that to securitize credit transactions as a way to solve the commitment problem that arises when you are extending people credit, basically giving people good resource value in exchange for a promise of a value exchange that's going to happen in the future. It was very incredibly difficult to securitize that just because there was no formal property rights, and the contract enforcement closely related to that. Contract enforcement was very weak. The government, the formal systems of contract enforcement were corrupt, slow, bureaucratic. I think it took in some cases near 400 days to actually get a contract enforced through the formal mechanism. I think it was the World Bank numbers. Between 120 days to 400 days, I think was the range, which is obviously incredibly undesirable. So these problems of contract enforcement, securitization, and volatility of the business climate were the major problems that existed for anyone who wanted to engage in credit transaction in Afghanistan. And so those were the problems, but what were the solutions? I mean, there were two set of financial institutions in the country. There were formal ones, chief among them the banks, but there were also a series of informal institutions that were acting as financial intermediaries, acting as sort of institutions that were helping Afghans access credit. On the formal side, it was mostly banks, and the banks obviously relied on other formal institutions like court system and the government with regard to the enforcement of loans and structuring loans. Banks and formal institutions in general were very, very bad at solving these problems. For example, if you just take the volatility of business climate, they had these prefixed, inflexible repayment schedules that had to be agreed to and adhered to beforehand, and many businesses could simply not adhere to them just because they did not have reliable cash flow. Also, banks obviously wanted formal deeds to securitize their loans, and very few people had reliable formal deeds in the country. And also, banks relied on formal contract enforcement when they issued loans, and the courts were not very supportive and just very slow and corrupt. And it was very difficult to enforce contracts, which made obviously bank loans more expensive and just generally undesirable. And as a result, the banks were not doing a very good job providing either working capital financing, just helping Afghan businesses cope with their daily operation, or providing investment financing, like longer term financing. Both portfolio of bank loans in the country remained very low, very, very low. But on the other hand, there were these innovative informal institutions that emerged in the country that were very vibrant and very, very central to the whole operation of the whole economy, especially in managing credit transactions. And they were very much better at solving these three problems that I identified with regard to primarily working capital financing, that not necessarily investment financing, long-term financing, but working capital financing, helping businesses smooth out their operations, helping businesses cope with the unpredictable cash flows and such. They were very good at the institutions that emerged were very good at them. There were some institutions that helped with investment financing, like longer term financing, but those were much they were much less effective in my assessment. And the institutions I've identified and looked at, one set of them were involved in the supply chain financing. And the other, and that's the trade credit and Sarafi market. If you're looking at the diagram, that's where they are. And I'm going to spend a little bit more time delving deeper on that supply chain aspect of informal financial mechanisms in the country. But there were two other property rights, basically, that had emerged informally. Some of them with one of them with support from the formal sector, formal legal system. Another one actually completely outside of a formal legal system, actually against the formal legal system, because the word you see Garawi there is actually illegal the way it's practiced under Afghanistan law because of the appearance of violation of prohibition of usury, which is under Islamic law prohibited. So these are two other terms you see here, Sarkofli and Grawi, those are the two other kind of property rights that emerge informally to help facilitate credit transactions in the country. And both of them were able to contribute to investment financing in the country as well. So I'm not going to spend a lot of time on those, but they're very interesting in their own rights. For example, Sarkofli is this unique property rights that was created through practice in business reputation that is tied to the place of business. Basically, the person would enter into an agreement with an owner of a property, often a store or a place of business, and would agree to pay rent. And in exchange, he or she would obtain rights and the increase in the value of the place of business that is driven by the reputation that the user of the property generates for the location. So, I mean, as you can imagine, like an empty store doesn't have as much value, but a store that is known as a place where people can go get certain products and has a reputation associated with that, and that reputation is not easily mobile. I mean, the person cannot just go and open a store somewhere else. They would lose some businesses, and so the reputation that they create through good practices with their customer base is tied up to that place, and they want protection against early eviction or opportunistic eviction by the landlord. And the protection was given to them through this right of Sarkofli, which was the right to remain in the property as long as they paid reasonable rents. So if the rent could have been increased, but it had to be reasonable, comparable rent in the market. As long as they paid that, they had protection against eviction. They could sell the right to remain in the property to someone else. So the Sarkofli was tradable rights. They could be paid out by the landlord or someone else who would be interested to take over to basically benefit from the reputation that is generated by the previous user of the property. They would have to pay, and it became a tradable a right, basically a tradable property right. And it involved it's not a past tense. It still exists. It involves kind of unbundling of the property rights, because the landlord remained the owner of the underlying property. So, for example, the landlord would have a right to build on the property, but anything that the landlord would do should not have interfered with the enjoyment of the property by the tenant, by the business tenant. That was a very useful tool in terms of how it connects to investment financing for developers to kind of recover the investment they would need to make to build, for example, a shopping center. They could sell these Sarkofli rights, basically tell people, okay, give us this much money, I'll rent to you this place, right? Give me this a lump sum of money, and then I will rent you this place, and I will give you also a Sarkofli rights, meaning I will give you a protection against eviction. So if you come in and start your business here and you generate a customer base, I would not be able to opportunistically evict you. And the people would be willing to pay that lump sum of money to get that protection, and that money would be used by the developers to recover the construction cost, basically, to build all these things. And it could have been sold even before the property was being constructed, without having to actually sell the property, without the developer having to give the ownership of the property to the tenant. So it's interesting property rights developed informally in the country in its own rights, and was very, I think, important. And all business stores in the country, like the vendors in the country, are all more or less in Afghanistan are under Sarkofli. A majority are. Another one that I will not spend a lot of time with is this Grawi, which is basically an informal mortgage. It was solving two problems in the country. There was a housing crisis in the country, especially in urban centers, people in the places to live, and there was also a lot of people who owned multiple houses, and the people who had some money and they could not invest that money, so they were kind of they wanted to be passive investors. Obviously, there was no bond. Afghanistan doesn't have bond market or other places people could gain predictable return on their investments. What they would do was often they would not have enough money to buy a house, but they could make a payment to a person who needed capital but had a housing, and in exchange for that payment, they would obtain the right to rent the place. They would not own the place. They would not own the house or the store, but they would obtain the right to rent it. They could choose to leave the property themselves is rent-free in exchange for the money that basically they loaned to the property owner, or they could choose not to live in the place and could choose to let the actual borrower remain in the property but pay rent to become actually a renter of to the lender, in effect basically paying interest on the money lent against the value of the property, against this extra legal property rights that was only about the right to rent and enjoyment, not the actual ownership of the property. Or they could have just rented it to someone else. So they could have lived in it rent-free in exchange for the money they lent to the owner of the property, or they could have just let the owner remain in the property and receive rent, or they could have just found another tenant who was willing to rent the property and receive a rent from that person. And they would obtain the rights to this renting the property until they would pay back for the lump sum of the money that they loaned or paid in exchange for obtaining that right. It is a huge market. I think my estimates show that the amount of money that was being raised through this practice was double the amount of total loans made by the formal banking sector. It is still very much common practice in Kabul and Herat. A lot of people sell the housing, their needs for housing, as well as the need for some people to be passive investors, and the need of the businesses or some small business owners who have property, but they don't have access to loans. To kind of in intersection of all these problems, they came up with this arrangement, and they were able to solve that problem for all three parties involved. Two parties involved. The person who wishes to be passive investors has some disposable income, some money they could use. Three sides, basically. The person who had this excessive and they had this savings, wanted to be passive investor, and the person who had a property that they could afford to put under this arrangement and needed the credit, needed basically the loan for whatever reason. It could have been a business purpose, but it could have also been just a personal expenses. Having a wedding is a costly, and they needed that amount of money. They could have used this. And the third party, often, not always, but there was often a third party involved who just needed a place to rent, and that made it possible for them to rent a place. So those are the two property rights that emerged, and they contributed to basically allowing for some investment financing to happen, although most of it was still connected to working capital financing, just basically smoothing on the operations of in the market, the real estate market, as well as business market. Another third one, I will spend a little bit more time with regard to third one, that is for instance, supply chains. It is kind of a sketch of a for instance, supply chain, how it works. It is completely based on credit, and it was a very much import-based economy. So there would have been a foreign supplier that would sell certain property to a seller creditor. Like you can think of a top importer in the country, and very often those purchases had to be done prepaid or paid immediately. So the credit was not very much extended by foreign suppliers to top Afghan importers for a variety of reasons. So there was this obligation to make payments fixed, predictable payments to these foreign suppliers to make sure that goods would be imported into the country. But then when these top importers would receive this money, they would distribute them to intermediaries and to the distribution chains. And here I did not add a lot of layers, but it often can involve multiple layers. But these goods would be distributed against not cash payments, but against a promise to make weekly payments. So the top importers would just let all these distributors get these goods that were imported and try to sell them to the retailers, and then retailers would sell them to consumers. And all of this done was just basically on credits. There was a flow of goods, and in exchange, a flow of weekly payments, which were very much unpredictable. So these distributors and then the retailers would be required to engage in good faith efforts to sell as much of this these goods as they could, and repay the distributors, and then distributors would repay the top importers a weekly payments. And the people from the importer, top importer, and the people from the distributors would often visit the retailers, which would be their kind of debtor, the buyer to debtor, and to collect. Their employees would visit to collect, and they would have a way to monitor how much actually goods being moved, and they would expect a proportional repayments on the kind of the revolving base from these people. So they had arrangements in place that would allow them to monitor the behavior, make sure they are actually engaging in good faith efforts to move the goods and make payments. But at the same time, it was very much dependent on consumers. So it was not a lot of sales happening. The retailers would not be able to pay the distributors a lot of money, or could pay very little, and the distributor would have a hard time paying the top importers. They would pay them maybe some, but not a lot, and then the importers would be in real jam in terms of paying their foreign suppliers, because the foreign suppliers were not engaging in these flexible credit-based arrangements. And that's where this sarafs, or hawaladars, as they are known in literature, come in place. They're known in Afghanistan as saraf, and they're basically miniature banks in the country. They are these money exchangers who do a variety of things. They engage in currency exchange. Afghanistan is a de facto multi-currency economy. You can basically buy anything you would like in any currency. And most businesses often hold a basket of different currencies. Because it's an import-based economy, the currency exchange is very influential, is very impactful on the whole entire market. And it is very risky to keep all your money in Afghani, and all businesses often set the prices against the currency exchange, like the rate of currency exchange. So the prices actually change based on the change in currency exchange, but also hold different currencies, often with a hawaladar with whom they have continuous working relationship. So they could easily change money from one currency to another as a way to manage the currency exchange kind of risk. And so the money that would be kind of trickling out towards the importers or distributors would find its way to at these currency exchange places, because everyone wanted to, even weekly, as they collected, they would transfer their weekly kind of receivables from the market to these sarafs and to exchange into a basket of currencies, often the currency they need to pay the foreign supplier, but also just a lot of time just to keep for safekeeping, but also to be distributed maybe to their different provinces of the countries if they have to make payments into different provinces, also to be sent to foreign suppliers, other countries. So sarafs also, in addition to doing exchange, they did hawalas, which is literally transfers. They did domestic transfers, and they did also international transfers for a fee. And all of this was happening in multiple currencies. So sarafs were doing exchanges for their clients, and also they were executing all these transfers domestically and internationally for their clients, basically acting as their de facto banks. And they were also helping out these people, especially at the top of the supply chains, that were shouldering this risk of the cash flow uncertainty, because the top importers in the countries would have to basically bear this risk of market uncertainty and not know how much money they can collect every week, because it's dependent on the prevailing conditions in the market. But they had inflexible kind of obligations outside the countries. So what would happen is that when the money was deposited with these sarafs, and there was a need for a payment to be made domestically or internationally, often saraf would execute credit hawalas. So they would execute transfers based on just credit. And then their domestic clients would pay them back as they collected on receivables, unpredictable receivables inside the country, and the cash flow would just go to the sarafs, and they would be made whole for the credit transfers that they have executed. So they basically, in effect, were issuing a line of credit, a line of working capital loans for these top, for the larger businesses in the country that were, on the one part, they were relying on foreign supply of goods, but also domestically, they were engaging as basically creditors for the smaller retailers in the country. And as a result, they were managing a lot of risks in a business climate that was very, very much unpredictable. And a lot of these relationships made the Afghan supply chain market is very competitive, very competitive. The barriers to entry to the market was very low. These relationships was very easy to establish and maintain. It was all based on relationship, but there were mechanisms of control in place, as I, for example, talked about how site visit was common. Just also people obviously capitalized on the personal relationships they had, family ties they had. And most businesses in Afghanistan are family businesses. But these were very easy relationships to manage. And as a result, supply chains in Afghanistan ran very smoothly, and they ran on credit. So consumers could buy on credit, retailers could buy on credit and just pay against how much they actually move, the goods they actually are able to sell. Distributors were all able to extend credits to the retailer, and top importers were also able to distribute goods through the distribute channels based on credit against credit, because they had these partners, these financial partners, these sarafs and hawaladars, who were able to help them, give them these lines of credits when they needed to make inflexible payments to foreign suppliers. These hawaladars did a lot more than just this. They basically were de facto banks for a lot of these medium-sized and large-sized businesses in the country. As I said, they were the places where they were basically the institutions that helped many businesses manage their currency exchange risks. There were these institutions. They were the institutions that helped many businesses actually distribute payments domestically and internationally at very, very reasonable rates. They also engaged. They would engage in equity financing as well, because of the amounts of money they had. They could become partner up in certain businesses, and many of the sarafs would actually, hawaladars would branch out and become co-owners and engage in equity financing as well. So they played a crucial role. They often even issued, especially when the market was booming through the period of growth, they would engage even checks, like bank checks, post-dated bank check that acted basically as an LC. So if there was no personal relationship, you could just get a check of saraf that was very reliable for a future date and give it to the person from whom you want to receive goods on credit, and the person would give you the goods against that value of that check, against the credibility of that check. And they knew that on the due date, they could show up in the sarafi, in the hawaladar, and just cash the check, the post-dated check. So the post-dated check would be in de facto, in a kind of act as a basically domestic LC to connect people who did not have the other ways that credit transactions could be facilitated. When the market went through the period of contractions, a lot of sarafs had to default on those checks, and the practice stopped or at least was reduced. But it was a common practice for a very long time. And sarafs very much honored these promises because their entire business model was based on reputation, and they could not afford to dishonor these checks. And they were basically the glue that was holding everything together. And the reputation of a saraf was everything. And these sarafs, hawaladars, sarafs are known by their name in Afghanistan, but internationally they often called hawaladar or money exchangers. They kind of are in some very close proximities, working together, like thousands of them, hundreds of them, literally in major provinces in the country, in a couple of buildings. So there is the image of, for example, Wall Street you have in your mind of dealers in shouting and just in a very crowded market. That is basically the image of the hawala markets in the country. And if you just Google them, you will see just a lot of people in a very small, close proximities engaging in all these transactions. And none of these had to be, these hawala did not have to be like a major, they did not have to have presence everywhere. It was a kind of a network operation that ran on relationship. And every saraf was kind of a node in that system. So they did not have to have offices in all the places in the world to be able to execute these transfers. They could just direct money to these networks, this dense network that existed. And every saraf, every hawaladar was kind of a node in that network. So all of them had access to the collective reach of this network, which made it work very, very well. And these sarafs obviously have been there for a very long time. They've been supporting transnational trade in the region, South Asian context, for a very long time. But also, given Afghanistan's very hard history, very, very difficult history, these sarafs have been very crucial in mitigating all the economic disasters that has befallen Afghanistan. They also have the reputation of working with anyone. I mean, so illegal money, drug money, everything that goes on in the Afghan economy goes through the veins of the Sarafi markets. But at the same time, they are helping everyone, the businesses, legitimate businesses, Afghans who send money back home through remittance, and they're really the key to the functioning of Afghan economy. Most Afghans are not banked, although banks are important because they were the way that money finds its way through the market. I mean, the payroll and other form of payments that were supplying the Afghan economy. Afghan economy was dependent on those payments, came from outside and was channeled through the banks. Banks were important. That's why the stop in financial sector in the country is causing the disaster it's causing. But then the money would just get distributed everywhere. And these SAROCs would be the actual ones that would be doing the rest of managing the financial markets in the country. I will stop here and try to give you an overview, but I'll be more than happy to answer any questions you may have. It was just a bit of a taste of how complex the system was in place, and how the people who often wrote up plans about fixing Afghanistan economy or reforming institutions did so without having any kind of clue as to how everything was operating, and often assuming a clean slate and trying to impose these their solutions based on international best practices on an already complex and very much sophisticated working system, and most of the time were the solutions they were offering were not workable. They did not appreciate the problems, they did not know how to solve them, and they were also imposing them upon a working system that, despite of its drawbacks, was solving real problems for the Afghans in the country. And that's why most of these reforms that were being done, recommended and then pushed from top, really did not gain any traction in the country. And the story of the country failing in matters of days, and the formal army failing in the matter of days, is also the story of many of other legal and financial institutions failing at a similar rate, just because of how hard time they had to actually be part of the organic Afghan economy. Okay, I will stop here.
Thank you so much. That was a fascinating discussion. And I think that, when one of the things that we look at here at the Center for Governance and Markets is really this gap between de jure rules and de facto practices. And I think one of our working hypotheses, I can't speak for everybody here, is that, when these gaps are large, we see development problems, we see security problems. When the gaps are smaller, that's when things tend to work better. And efforts by international donors or state building efforts historically, try to make these informal practices look more like the state, rather than have the state reflect some of these informal practices, however imperfect they are. And I think one of the challenges is really building on the legitimacy that these informal financial practices have. And so it's a bit heartbreaking, Haroun, to hear you speak about all of this in the past tense. And I imagine it's even more challenging for you to do that. So I was just wondering if you could tell us a little bit about where you see this, how you see these dynamics moving right now, because I can't imagine under the current situation in Afghanistan that we're going to see these informal practices wither away anytime soon. In fact, we're hearing so many reports about the hawala system and the hawaladars, what an important role they're playing in keeping the economy afloat right now. And I was just wondering if you could tell us sort of more broadly, I don't want you to have to prognosticate the future, but your sense of where this is going, what's happening now, and what are the implications for this informal system?
Absolutely. I mean, you're absolutely right. Hawaladars have been there for a very long time, and they've been through it a lot. I mean, Afghanistan obviously has gone through these periods of institution building, formal institution building, and then periods of bust when everything fell down and the order broke down. And Hawaladars have gone through it a lot, through it all, and they've adapted. I think because I believe they are their way they operate, this network, distributed network they have, the way They solve the real problem for the businesses and the people who remit back home money, and the fact that they have, as you said, they have embedded themselves in the Afghan economy and culture. So these practices are legitimate in the sense that Afghans know them, use them, trust them, and they are tested, and the people who engage in them appreciate that, and they see that as an important role for themselves. However, that being said, and that's why I think they're going to remain important going forward, especially if the formal financial system collapses, continues on the collapsing path that it is. But at the same time, these Sarovs this operation was the way they operated was very much entangled with the formal financial sector. So these are not kind of static operations. They were adapting, they were interacting with everything that was going on in the country. In the formal sector, for example, most Sarovs held their money with banks because it was cheaper, safer to keep deposits in banks instead of having them in your place of business. Also, they used banks, multiple personal accounts. They resisted incorporating, and because they had their own concerns, also because of the money laundering and other regulations they would be subject to. But they were very much entangled with the formal financial markets, formal financial institutions in the country. Now that there has been a problem with regard to withdrawing money and such, their operations also hampered. They don't have access to the funds, their own funds that were held in these banks. Also, they don't create monies. They are basically greasing the economy, and the money was coming from outside. Also, the money was coming from aid from other sources and was coming through the formal financial sector being distributed. I mean, the other source of illegal money also existed, opium and such, and were intermingling, but most of the money was coming from outside. So although they're going to remain important players in greasing the economy, in mitigating the pressure, in basically helping people survive, they're also very much hit because of the collapse of the formal financial system and because of the whole cash kind of and liquidity crisis that is happening in the country, both in having actual cash flow in the country, but also just this kind of drying up of money that was kind of running the whole game in the country. Some people don't appreciate, even Taliban were relying from the money that was coming from outside. They were getting money from the NGOs operation. They were taxing imports into the country, and people power to purchase was coming from the money that was aid. Saying that 50% of the Afghan GDP was equal, aid was equal to 50% of Afghan GDP. That counts for all the money that the Taliban were able to tax, collect, Sarovs were dealing with. So it is going to be an adjustment, and it's going to be a painful adjustment, but they're going to survive. I believe they're going to survive.
Okay, great. We have so many questions. It's really quite remarkable to see this. And I just should note there are several friends here from Afghanistan who are here with us. I recognize some names. Some people have already shared their names in the chat, but I see some other attendees who are in Kabul right now. So it's really heartening to see all of you here. So some questions. To what degree is the Sarov system affected by the current sanctions and freezing of assets?
So the operation is very much entangled with the formal financial system. So the limits that are put on the withdrawal of money from the financial from the banks, for example, has hampered their ability to operate because their funds are held in banks. Many of them held huge amounts of money in banks, and they use banks for domestic and international transfers at time as well. But if Afghanistan goes down the path of being completely cut out from the world formal financial system, Sarovs can manage. They're not really although opportunistically and being very creative, they've used the formal financial system in creative ways. That is not the only way they operate, and was just the convenient best choice at the time. And if sanctions are imposed, I think they can easily manage a transfer of money. Basically, they operate based on kind of ledgers and in the region, goods and money being transferred. They balance them. They don't have need for physical transfer of cash as much. They do physically transfer cash as well. So to answer shortly, they will be much better equipped to adapt to an Afghanistan that is under sanctions, and they're going to become much more important for Afghans and the Taliban, the government operation, if Afghanistan is cut off from the formal financial system.
So you seem to suggest here that this system is actually a source of resilience, that despite the sanctions, despite the inability of the central government to reform itself over the past 20 years, the inability of the international community to effect reform successfully, that this really has been a source of continuity. So that leads us to another question: is if you were in charge of, if you were the decision maker, if you were the policy maker who was responsible for regulating the financial system, what would you recommend a leader do with this kind of system? How would you recommend Afghanistan move forward? What kind of advice would you be giving the Taliban with regard to...
I tried to give advice to the previous government on the hawala markets and others. Ahmadi, as you know, the head of the central bank, had a conversation with me about this, and I told him that the attempts to push them out, hawala are seen as kind of a threat, as seen as a challenge and an impediment to development of the country. That was how they were perceived, mostly because the major donors were concerned about their entanglement with the terrorism financing and money laundering, which are legitimate concerns. But that hostile attitude towards hawala will be then translate into the formal policy of the Afghan government. So pretty much everything the central bank did was trying to limit what they do and push people towards the formal banking sector. And did not appreciate the vital role they play for legitimate Afghan economy to operate. The supply chains in Afghanistan literally could not operate without hawaladars. There would be a huge loss in trade if hawaladars stopped operating. And for example, importers had to pay cash directly and then import and then sell on cash to distributors, and then distributors had to sell on cash to consumers. It would have just been a hugely different market and for wars. I suggest that to them, they should recognize the credit function of hawaldars and try to offer them this opportunity to expand on their credit ability, to their ability to provide credit in exchange for some form of regulations, a little bit of oversight and transparency. And I think a lot of hawaldars would have welcomed that. But the government went the other route. They decided to outlaw the credit functions on a formalistic argument of saying, you're not a bank, therefore you cannot offer credits. Only bank by legal definition can offer credits, therefore you cannot do it. And as a result, their policies were often very much resisted because it got at the heart of the business model of the hawaldars. If they could not be the source of working capital for their clients, it could not be the parties that was smoothing all these transactions, then they did not have a lot of appeals to the user. So they could not, what the government was proposing the hawaldars do would actually be a death sentence for their business model. And they were, for some reasons, had refused to acknowledge that they had a legitimate role as credit and as a financiers in the economy and tried to recognize it. And most of the arguments were actually formalistic. They were basically saying, you're not a bank, therefore you cannot be offering credit. And I would welcome Taliban to appreciate the work they do with regard to the credit role they play and try to actually capitalize on the credit role they do, rather than just seeing it seeing the credit function as merely a bank operation. As I said, bank had a lot of constraint. They could not really provide credits the same way hawaldars and sarrafs could.
Mm-hmm. So another question, this is just a basic question about where the resources in sarrafs come from. Who provides their starting capital to begin with?
It is very interesting how one becomes a sarraf. There are two major ways. One is apprenticeship. So it's very much knowledge, kind of rich practice. It's not something you could do with money alone. So you have to understand how the currency market works, be able to appreciate and manage multiple currency and trends in the multiple currencies, at the same time manage multiple relationships. So it's a very sophisticated operation, and it's not something you could do with just money alone. That's why most people who become sarrafs are either born into a sarraf family, meaning they kind of grew up and they are a family of sarrafs, or they start basically being small players in the market. If you go to Kabul and Professor Mustashvili have gone, you see people holding very small amount of money, maybe $2,000 in their hands, and they would engage in exchanging $100, $50 on the market around the sort of major market centers, but also other parts of the countries. And they basically have to start from the bottom and learn the trade, establish relationships, all those networks, learn how to do this, and then enter. And this barrier to entry is actually very useful because it makes the whole system, the trust in the whole system, builds up the trust in the whole system. If there was very low barriers to entry, anyone could become Saraf overnight, then the reputation and all the informal ways that people were being held accountable would not have worked. If you could open a Sarafi today and close it tomorrow, it could not have worked. But for the knowledge complexity of the operation and the intentional barriers to entry and all the relationships you have to build, there are basically two ways you can do it. You can start with very little capital and basically build from there, gain trust to get more people's money trusted with you and build that operation that way. Often you start from not having a store, even just standing on the street, to renting a place and moving. Often it's kind of a joint partnership. So there are multiple people who pool their talents and their networks to actually get it started, or you could just be born into it. A lot of people are also born into it. And born into it is a major issue in Afghanistan, major avenue in Afghanistan, because we're not talking about nuclear family. If your cousins is a Saraf, you have a way in and you will be working for them for a little while, and then you can kind of, as a way of how the same way a cell splits up, a Saraf could split up, and that could become a way that the business spreads. So the family don't think of just brother and son. It's just much more extensive in the way it actually helps facilitate some of these entry into these markets.
So that leads us to some other questions that we have here about enforcement. So we have a question from a friend I know who is in Kabul right now, who's talking about ways to regularize and formalize the hawala system. I know you've talked about that in some of your work, and you've touched on that in the previous question, but that also touches on this issue of enforcement mechanisms. So in order for this system to work, obviously we know that any kind of rule requires an enforcement, and something that is such a vast scale. Right. So you're talking about, economists have been talking about this for a long time. Economic historians have been chronicling the rise of economic growth by focusing on economic scale. And so many of the stories we hear from medieval Europe and trade fairs and how trade expanded in Italy, where you are right now, is one of the classic examples. But what you're suggesting, and I think your research shows, is that we see these dynamics exist in places where we don't necessarily expect them, but so much of that relies on enforcement mechanisms. So what can you tell us about how these rules are enforced informally? What are the informal institutions that are used to resolve conflicts? What institutions are used to enforce these rules? And then what are the lessons we can learn from that for thinking about regulation in the future?
Absolutely. I think there's a lot of interesting research has been done, and my research included, into how they actually regulate these markets. There are self-regulating markets. I mean, until very recently, there was really no formal regulations. But they do care about self-regulating. There are norms that are in place, and those norms are monitored by everyone. And when they're broken, there is a different form of social sanctioning, just ostracization, because the reputation of Saraf and Saraf market is seen often as a collective property. So the idea is that if you fail as a Saraf, it damages the reputation of the entire practice. And all these people have is basically their reputation. So they have associations and they have methods of dispute resolution. If there's a dispute, they resolve them. But they have very keen interest in first of all, resolving disputes internally, making sure that disputes are fairly resolved, and also making sure that everyone actually that is operating in a market, they actually honor their commitments. Because if they don't, the idea is that there was going to be a negative externality to all other Sarafs in the market. So, I mean, you can think about informal dispute resolutions in many markets, and they exist in many markets in Afghanistan, and there's a range. In Sarafi market, it's kind of the golden standard, just because of how close-knit the market is. It's literally a couple of buildings. So tech interactions, very much personal, very much, the knowledge is very rich, and it's real-time knowledge, because if you can imagine, the currency exchange is something that changes by the minute. So you need these rich avenues of information sharing. which allows for also monitoring and other things to happen. And if there's any time there is a problem with a dispute, there's going to be informal ways of dispute resolution, mediation, and such, and a huge amount of pressure for everyone in the market to elicit compliance because of this conception of the reputation of this practice as a collective property and this appreciation that there is a negative externality. If one saraf fails, the whole standing of the sarafis in the market suffers, and that would be a threat to everyone. They do, because of all of this, they have their own ways of resolving disputes. All of them have unions. They have also national unions that was formed later as a way to resist against government regulation. So they're very good at basically solving collective action problems. So they have each market in each city has its own union, has its own dispute resolution board that consists of influential people. But there's a national union that also help with resolving disputes. They've been very good. Also, you have to keep in mind that the barriers to entry is very high. So it's not something that can just opportunistically become a saraf one day and then take people money and just flee. It does happen, but very rarely. And this is something, the reputation, which is basically their main capital, is built over time. And as I said, people have to be socialized, have to be kind of bled into through family ties or through apprenticeship, starting upward. That those barriers to entry and this reputation and dense kind of network of relationship make the system work very well and reduces the number of opportunistic behavior to a very manageable number. And then those disputes that do arise are resolved through these forums that are very inclusive, informal, basically based on mediation. And there's a lot of interest in monitoring and enforcement just because everyone is very interested in protecting the collective reputation of the market.
Can you give us an example of a time where someone has broken these rules or a punishment that is followed? Because I'm sure that you could. Right. I mean, it's rare, but I imagine the punishment has to be pretty tough.
I think if in terms of punishment, the death sentence would be just expulsion, which is like you don't have a place to work here anymore. So it is the worst thing that could happen to a saraf, basically, because the reputation of a saraf also comes from being part of that market. So basically being in a building. So Shahzad Market is the name of the major center in Kabul for Sarafi markets. By virtue of having a place of business there, you are given a lot of kind of reputational capital, but also you are privy to a lot of rich information, this network of sarafs that you can work with. Just being expelled from that market is a huge cost. And any something that everyone who's saraf that has an interest in continuing in the market would be willing to avoid and comply with any decision that is made by these collective bodies to avoid. But with regard to the past deals are broken in terms of how someone would be required to repay the money, for example, they have from someone. That gets to this idea of dispute resolution in the country, and it is common not to saraf but other places. It's very much seen as a problem solving. It's not seen as a matter of punishments. It's not seen as a matter of even all these commitments are often underpinning them is a matter of good faith. If someone has done with good faith their work, but they have suffered because of the market uncertainties, these collective bodies actually come together. They try to pressure the creditors to give them time or reduce the amount of credit. They often raise capitals and pay for those good actors who failed because of something beyond their control, try to negotiate some sort of solution that would be akin to restructuring that you have in bankruptcy in the United States. Like you don't push them out of the market, you allow them to continue to do work in a reformed way and get everyone to give time or reduce their debt. But the bad actors also exist, and there are people who may just flee and go away. But the numbers are not that high. At least the number is not that high to destabilize the whole system. And I think partly it's because of, first of all, a high barrier to entry. You cannot just become a saraf overnight. It takes a long time to get to a place where people will actually trust you with all their money. And at the same time, it's very hard to flee and get away, given that there are so many dense relationships, often social, that tie your entire family together, and you will face consequences up to the point of actual kidnapping, killing, those methods of enforcement also exist. If you're actually a bad actor that who's trying to flee and is not just a good person in the market who faced kind of a bad luck because of the market conditions. So all range of actually killing and kidnapping up to restructuring the debt exists, but the numbers of dispute are also kept low by all the other mechanisms that are preventive and trying to keep bad actors, opportunistic actors actually out of the market.
Yeah, and if you have a few minutes, we just have a couple of more questions, if that's okay. This is fascinating. So there's a question from Paul Fishstein. Hi, Paul, good to see you here. I hope you're still here. We often hear of the informal institutions' high cost of credit as a reason for the need to develop programs for microfinance and other lending. Is this reasoning correct? What about the relative costs of credit between formal and informal sectors? That's his question. I would add something to this, that there's also the cost of exclusion, right? You've talked about families and family access. This is something we hear about in terms of local governance as well, is that, there's certain families that lead and historically we hear about these things in egalitarian terms, right? That you have to have a good reputation, but there's also risks to that as well. Right. So I was wondering if you could, I think that's a cost. I think of that as a cost in a very similar way that Paul's talking about cost. And you need to develop alternatives because these programs become either expensive in terms of finance or expensive because they're hard to access if you're an outsider. Could you say a little bit more about that?
Absolutely. With regard to cost, I think we have to distinguish between working capital financing. Those are short-term, like smoothing of transactions that the SAROFs offer. And if you want to compare that to a working capital loan that you get from the bank, SAROFs loans are incredibly cheap. The reason is that SAROFs often are in competing with other SAROFs. And the reason I'm working with SAROF X is my person is that when I need it, he will help me out. And the reason the SAROF wants to keep me is that because he makes his money not from the interest he charges me, but from the currency exchange business that I bring him, because you can imagine that these people are generating a lot of currency exchange on a weekly basis, on daily basis for SAROFs, and they make money from that exchange, but also from the commissions that I receive on hawala. So there's a competitive market. And the SAROFs have to keep their business partners with them. And the way they keep them is by offering things like working capital loans. And they don't make money from charging interest on these loans. They make money from the currency exchange and the hawala business that the business partners generate for them. However, if you are a person who doesn't generate a lot of hawala business, the person who doesn't generate a lot of currency exchange, you will get charged for these credit hawalas, quote unquote, the working capital credit hawalas, but it's often structured as a higher hawala commission rate or a relatively higher currency exchange rate. So it's not a naked interest because, as you know, Afghanistan is an Islamic country. Interest has a lot of stigma attached to it, but they find ways to work in the kind of how much business you generate for them, how much money you're bringing in for them as a business, and in correlation with that, you will get either free in terms of added cost to a short-term credit hawala that is needed for you to smooth your operation, or you may get very low price compared to the bank. However, this is working capital, so short-term. It's a matter of days and often weeks. And the hawalas are not taking a lot of risks because, first of all, they have very good knowledge of your business operation. They know how much money you have on the market because basically they're holding your money. They've been holding your money, your receivables from the market with them. They're basically a person who would know your finances is your SAROF because he's the main person whose your money is going to be handled by. So they kind of have a good sense of how good you are. And also these payments are often tied with real goods, right? You are paying for a supplier. So there's actual, although it's not like a lien that you could go to court to enforce, but it's an understanding that he's paying for something to import. So there is real value here. And it's not paying like for something, a past debt, right? The SAROF would not give you money to pay your past debt in the same way. They are helping you pay a foreign supplier. So there's actual goods coming in. They understand that you'll be distributing them and there's going to be money coming back. Also, they're very short term. It's not something that is going to be done a long term. So in that regard, with regard to smoothing the operation, they're very cheap and the business model works very well. That's why they're very, very much popular. But when it gets to longer term investment, like the money you need to start a business and such, startups often do not offer those because they also have a very hard time securitizing and managing the long-term risk the same way banks do. And they obviously have much less capital than a bank does. So they're at a disadvantage just in terms of economy of scale to deal with those long-term investments, to have a more diverse portfolio. So they don't, but they do offer them at a much higher cost than a bank, just interest rates, to people who are desperate. People who in no ways can get money from the bank and they need a loan. They can go to startups, and there are some startups you can think of them as loan sharks because they have a lot of money and they understand there's a high risk. There's a person who's desperate, doesn't have other alternatives, and they do offer loan, but at very high interest rates and very costly. And anyone who goes to them goes as a last resort. You can think of them even like in terms of loan sharks, and they often do use all the tools available, including threat of violence, to collect on those, but very, very costly as a last resort people go to. Their most important contribution to the market is their kind of a smoothing operation, working capital finance they provide. That is where their added kind of value is. With regard to the exclusion, the cost of exclusion, it's a very important point, and I've tried to reflect on this in the work I did. I think, obviously, if you're talking about gender exclusion, startups don't work with women in the business sense. They do work with remittance, like women do receive remittance. That's a completely different thing. It's just going there and collecting money. But in terms of working relationship, women are completely excluded because women would not be part of those. I mean, it's hard for a woman to build reputation, business reputation, personal relationships that are needed for this thing to operate. But when it comes to men, so women are completely excluded. There's not any startup I've interviewed has never mentioned that they have a female business partner in that sense. But Afghanistan economy is also, I mean, business is pretty much a male-dominated business. When it comes to the exclusion of men because of, for example, family status and such, I found that they are, because it's mutually beneficial for all these transactions are mutually beneficial, people are willing to take a chance and they're very much willing to find ways to connect. And there are many ways people kind of overcome these exclusionary barriers. For example, there are intermediaries. We call them in Farsi, we call them miyanji, or there's a person who's already has a reputation with you and vouch for you. They're not guarantors, but they're basically saying, I know this person, you can trust them. So you kind of can use some of those, a wasita, a person who literally means connects someone. They help you if you are socially positioned in a distant place to someone, so you cannot rely on your personal connections. There are a lot of businesses that, a lot of people who may be willing to act as a wasita, as a connector. And also, you can start by having some small business and build from there. So it takes time. I mean, a startup financing would not come easy. You cannot just go out there and instead of have an idea, give me money, it would not work. But if you enter the supply chain as a retailer and then you build some reputation and become a distributor, you can pretty much get in. It takes time. There are barriers to entry, as you can imagine. With an informal enforcement mechanism, you need barriers to entry because there's no third-party enforcer. If people can just take money and just run away, they pretty much can. There's not that much enforcement happening in a way that in the US you can work with a stranger to get enforcement. So there are barriers to entry and they keep people out. But I found out that there are not, for example, ethnic barriers. I mean, when it comes to business, a person is more than happy to work with a Hazara. It's money. Money is money, regardless of who you are. There are those kind of barriers do not exist. There's time needs to be put in. So startup financing would be very much limited and was very much limited outside the family networks that people would fund you. So there is exclusionary effects, and there's an argument to be made. And the long-term financing startups are not very good at them. They are not better positions to manage those risks than banks are. Actually, they sometimes are even worse in managing them just because they have fewer capitals compared to a bank. But in terms of exclusion on something other than gender, there are many ways to overcome those if you are already in the market.
So, this is such an important point. And I think it's something that when people from the outside look at Afghanistan, they see that, okay, in governance or in the economic sphere, it's obviously dominated by men. Especially in the informal or the customary systems, right? In my own research on governance, obviously similar dynamics. But when we think about efforts to correct this, that the outside world, the international community brings in, and you can tell me whether you agree with this assessment or not. It's a statement. You tell me what you think of this. Is that the international community comes in with a solution to fix this issue of gender equity, whether it's microfinance, whether it's a regulation. But what they end up doing is actually creating a system that's actually far more unequal. Yes, maybe women can formally use it, but the vast majority of households cannot use it. So this informal system, while women are not the outside presence, they're not sort of physically represented to the outside world, it's more egalitarian in that every household has the right to participate. But as individuals, no, women generally do not. But the alternative that the international community tends to create then is something that is actually much more exclusionary. Yes, by the law, women can participate, but the number of families that can de facto participate is actually much more narrow than the system that they were trying to fix.
I mean, I would like to point out that not all these informal mechanisms of financing are excluding women. For example, Garawi that I talked about is actually major lenders are women. Partly because, as you can imagine, a woman would be much more interested in being a passive investor, like have some money from whatever source. It could be inheritance, often it's inheritance, or some lump sum of money the woman receives. They cannot go start a business with that. But what they do is that say, okay, there's this other person who has a business, they need money, they have a property, I will pay them this money, basically a loan, and in exchange, I will obtain the right to rent their place. I may live in it myself if I need a place to live, so it's a housing need, but also I get to rent it out to someone else and make money off of it. So it's a very common form of passive investment for a lot of women, these Gravi transactions. So, I mean, you have to also distinguish, and the major lenders, which would be the people who have some savings, they want to have kind of a stream of revenue, a stream of income based on some savings they have or a lump sum of money they have. And they cannot be active business partners, partly because Afghanistan business is very exclusionary. I mean, it's very hard for women to start a business, but they can become passive investors because technically become a bank that loans money to someone in one transaction against the value of property and obtain the right to rent that property as long as the money is held with the borrower to someone else and receive rent from them. My family members, a lot of them, women who lose, for example, a breadwinner and they receive some amount of money in inheritance in other ways, because I mean, if their husband passed away, they get some money in inheritance, but that is it. And they cannot really have, may not have marketable skills, they may not have access to a lot of economic opportunities. What they do is they just put a place in Garawi and they rent it out. So they receive a stream of income based on that. So not all informal mechanisms, by virtue of being informal, are excluding women, because some people think of informal meaning relationships, meaning women are excluded. That is not the case. But when it comes to active business like supply chains and such, then yes, I mean, it is kind of a revolving relationship and it needs continuous interactions. And those women are excluded from many public spaces, which means they would not have the reputational kind of capital to enter into those markets and would not be trusted and would not be allowed into those markets. So I think there's quite much more nuance in terms of thinking about how informal markets are impacting women's economic livelihood. It's not a black and white system, but as you pointed out, I mean, it doesn't matter how good things look on paper and how good the laws are, how egalitarian the laws are. If they cannot actually generate equal opportunities in practice, they are useless. If they're not used, then the users cannot access them. And the story in Afghanistan is that many of these formal credit opportunities people were not excluded, as you said, by law. I mean, no provision said no woman can get it or no X person can get it. But de facto, a large portion of the population was excluded because they the way that the institutional arrangements that were in place to mitigate access were not adapted to the Afghan context to make it usable for, as I said, banks had a lot of money held in reserve, $2-3 billion. And businesses would say, and businesses have legitimate business. No, they were not people who were just trying to steal money. They had legitimate business. They could grow if they had access to that capital, but they could not access it. And as a result, the whole growth of the economy was very much curtailed because of this formal kind of bias of the whole system.
Okay, so this is fascinating, and I don't want to keep you too long, but we have two final questions, and they're short. I feel like I want to keep you here all day. We have so many fantastic questions. I know it's late there where you are. Question, are these functions that just exist in rural, in urban areas? Hamid Hakimi is here. He asks if the Garawi and the Sarklufi dynamics, are these only urban dynamics? Do these exist in rural areas as well? And then we've had a couple of people ask about Sharia, about the relationship. I think some people are thinking about the future of Taliban rule. What is the relationship between these informal economic institutions and Sharia law?
Absolutely. With regard to the first question, so Garawi has, as I said, it works so well because it's solving so many problems at the same time. One driver for Garawi is just the housing market, because someone has to pay the rent on the property, right, that is being used as a financing tool here. So as you can imagine, in rural areas, there's not as much demand for housing, so there are not that many renters willing to rent a place. But the rural areas that are close to the city, given that the cities were expanding and becoming more expensive, actually became sited of Garawis. In my village, which is like 20 minutes drive from the city, over time, early on, everyone was living in their own home and no one was actually renting out or living in a Garawi house. But over time, it kind of was spreading to my part of the world as people were becoming renters or not living in properties that were not owned by them. It was spreading. So there is a housing kind of component and there is a renter market that is part of this dynamic. And that makes it much more relevant in an urban context than it makes it relevant to a rural context. So that with regard to Garawi. With regard to, but again, it was spreading as this renter dynamic was spreading beyond urban centers. Urban centers became much more expensive to live. The Sarkufli, is that rural or not? Actually, no, it doesn't have to be. And historically, it actually wasn't. For example, there were arrangements made when someone would make a land, you had a property, you had maybe farming land even. Someone would make investments to make the land profitable in any way. It could have been starting some sort of processing. It could have been making it more farmable or whatever. They would basically put some money in, and they were worried that they were renters. They didn't want you to buy your land, but they were worried that once they made it more basically productive, the land, you would just take it away. They wanted to rent it, and they would say, okay, I will make some investments to make this workable. I want to rent it and be farmers or be a small processor in your land, but I will have to make investments, and these investments are tied to this place. I cannot just take them with me whenever I go. And I'm worried that you would opportunistically just expel me from this land before I can recover all the kind of sunk cost I had here. So I would like some assurance that you would not opportunistically expel me and kind of capture the value I generated by making this property more profitable, this land, for example, more profitable or more productive. And as a result, Sarkofis would emerge in rural contexts with regard to even farming lands or lands that had multiple use, a small maybe processing, a small farm of chicken and such. The way it would work is that there would be a long-term renter. They could not be expelled. They had the Sarkofli, quote unquote, and they would have to be kind of bought out. But the underlying land remained the property of the owner. And anytime the owner was willing to buy out, kind of cancel the rent, but pay them for making the property valuable through their sunk cost, that would happen as well. So anytime, if you want to think about it in formal economics, there's Williamson, the person who won a Nobel Prize in economics by coming up with this idea of it's asset-specific investments. It is a common concept in economics that there are certain businesses where there's an investment made into an asset, and that investment is asset-specific. It's not very mobile. It's not very fungible in that way. And there needs to be assurances given for those asset-specific investments to happen. Basically, if you want the person to come in and rent a place and make it a better place and put work and value into the place, you have to give them assurances that those asset-specific investments would not be taken away. Wherever that dynamic exists, there are people who would be willing to rent a place, but they would have to do something to make it the place productive. And that investment would be asset-specific. They could not be just easily moved. Then the self-employed can emerge as a tradable property right that kind of solves that problem for the owner and the renter. So no, it's not, historically hasn't been actually emerged in, not emerged, I mean, it emerged in urban context, was very common in rural context because Afghanistan was a very rural area for a very long time. But more recently, it's much more relevant in trade and cities and shopping centers than it is in rural context, just because Afghanistan agriculture is obviously not doing that well. But it has the capacity to be relevant to rural context as well. And because it's not the basic asset specificity problem. That is a solution to asset specific investment problem. With regard to the Sharia, yes, with regard, last question, with regard to Sharia, I think the problem with formal laws is that it has to be uniform, and it has to be very much spelled out. There's not a lot of room for negotiation when it comes to formal laws. So if you were to make laws with regard to credit practices of the Sarrafs, it would be very hard to spell it out in a uniform way in a lot of enough details that could be actually codified without getting into troubles with many who would object that these practices essentially amount to interest-bearing loans, right? But when it's informal, there's a lot of ambiguities, there's a lot of room for negotiations, there is a lot of basically what is the opposite of uniform, different kind of ways that people can actually negotiate the appearance of riba. As I said, for example, they would give you and they would work in interest through the commission rates. Okay, you need me to execute this hawala. You don't have the money with me right now. You're going to pay me in the future. Okay, the commission rate is going to be this much, and it's a service I'm offering. I'm transferring money for you. Or okay, you need this much money to pay the custom fees. You're importing goods. Okay, I will give you the money. I will give you in USD, but the currency exchange for USD is going to be this much because you don't have the cash. So these people were able to negotiate around all these just because it was much more fluid. It was much more richer than the interactions than a formal paper-based uniform, kind of a formal code-based uniform practice would allow for. And I think if someone stopped to write down all the rules for these operations in great details, they would run into problems of how to justify it in a formalistic way on many of these issues that Islamic law would take issue with, like interest and usury. But given the ambiguities and the fact that it's not uniform, it is open to negotiation, basically person-to-person negotiation, there's much more flexibility there. And Sarrafs often do, it is a very interesting aspect of it. Religiosity is also a great source of reputation. So a person who's seen as more religious, pious, is seen as more trustworthy. So you see a lot of these Sarrafs actually take an interest in being appeared as pious and religious as a way to signal trustworthiness. So it's a very interesting dynamic that these people are very much concerned about appearing as being good Muslims because a lot of people may judge their trustworthiness based on how good of a Muslim they are. So they are very sensitive to this issue, although they do something that I think the best bankers in the world can manage to do but at the same time being perceived as very much good Muslims. And they do it by all these creative ways we talked about, taking advantage of the multi-currency environment, taking advantage of the issue of the hawala service being a service that is not just, they wouldn't call it interest, they would not call it anything that the bank would call it, but they found ways to get compensated for the time value of the money, get compensated for the risk of default. and all the things you need to actually be a financial intermediary. They found ways to do it. With regard to the Guravi and the Sarfali, that's a more complicated case, because there you don't have like the same unions and associations that could help solve legal problems, dispute resolution basically. These are like one-time interactions, often just one person having some money and wanting to kind of lease out, kind of get a Guravi on a property and then make money from the rent. Then that means courts are much more involved. The government courts are much more involved. And then the government courts have taken different views on this. They basically said the Guravi, the way that the people are practicing it, are illegal, because they say it is not quite a rent and it's not quite a formal guarantee. You're basically charging interest, and that violates the prohibition of interest that exists in civil law. Afghanistan law allows for charging of interest in commercial context and in the context of banking, but beyond that, it is still illegal to charge interest. And banks have said the Guravi, as it is practiced, would not be recognized. So there will be no property rights for the lender in the underlying property. It will be just a promise. It will be seen as a promise to pay back, and that promise can be enforced, but we will not recognize the property right that does emerge. Because it would be, if to recognize it would be to accept this credit arrangement that involves interest. And that has been a huge issue. They've argued that the courts should actually be more pragmatic and accept this practice and justify it. There are some justification under Islamic law, but the courts in Afghanistan did not go with them. The Sarfali, on the other hand, there was issue with Sarfali with mostly issues of uncertainties, because there's a lot of uncertainties involved, and there's definitions of property rights formalistically would not be amenable to something like Sarfali. So there were issues early on. We're talking about the Karzai government, early time of Karzai government, but the courts decided to accept and formalize the practice. Sarfali does not appear as a word in the laws of Afghanistan at all, but the judiciary, the commercial courts, recognize them as practice. So they look at the business usage and they basically say, we're going to enforce what the custom is, which has been obviously a positive thing. And it has to do partly because the commercial space is historically has been much more amenable to accepting custom than the civil judges. I mean, there's something that explains why different judicial affidavits, and I've written on this, published an article on how the different judicial kind of response to these two practices. And the anti-Guravi judicial attitude has always obviously made the lenders very, very vulnerable. So if a person does not pay you, you just become a debtor, and sometimes that doesn't mean much, especially if a person has basically received money from multiple people. That means you just have multiple debt claims. There's really no real rights over the property. The people who are lenders, and often are very poor people, because as I said, they're passive investors. These are people who have some savings and need some sort of stream of income. They're willing to engage in these transactions. So the borrower is actually more sophisticated, often because there are businesses owners that often need capital, and the lender is often unsophisticated, poorer person. And as a result of this judicial policy, those poor lenders have become even much more vulnerable. And it is commonly practiced in Afghanistan. If you know, a lot of people have been taken advantage of. If you're Afghan, you know a lot of people have been taken advantage of this. So it's been a terrible judicial decision. But those two practices get it to courts just because obviously there is no union of all the people who do this. It's much more distributed and much more people are like a one-time transaction kind of a deal. But the Sarofs have their own dispute resolution system, and it works well for them. So the courts don't get to say much.
Professor, this has been quite an education for all of us. And I have kept you half an hour longer than we had asked you for, and we have such a huge and engaged audience, still with so many questions. I just want to thank you from the bottom of my heart, from the bottom of the hearts of all of my students who are here, and the audience that has joined us. This research is so fascinating. If you haven't read Professor Rahimi's papers, I'd really encourage you to do so. Professor, I really want to see a book come from this. I think it's really important.
We just have to get to writing it. rewriting the dissertation to make it relevant to what's going on.
Of course. And if you are not following Professor Rahimi on Twitter, I'd really encourage you to do so. Just as his voice is so enlightening here, it's very enlightening on social media. He's been a real force for reason and balance and fairness. And I just want to thank you. You've done a huge public service in all of your public commentary. I think we've all learned so much from you. So thank you for that. And it's just a joy to hear about your academic work.
Thank you very much. Thank you for the invite, and thank you everyone for taking the time to be here. I know being online on a webinar is very much taxing, so it means a lot that you took the time and actually subjected yourself to this extra screen time to listen to me. I really much appreciate it. Thank you, everyone.